Hey there, this is Trader Tim from EminiMind, and today we'll be talking about how you can become a more patient trader and why that patience ends up leading to more profits. We'll also talk about a handful of winning trades from this week and go through some examples here. So apparently I'm supposed to be telling you to like and subscribe, but I'm pretty sure if you like the videos you can figure it out yourself. So let's just dive into the trades from starting from today, and we'll work backwards. So a quick glance at the daily chart on the ES. We can see this inverted hammer here yesterday, kind of a hammer, more of a bearish bar on the daily. I would expect the daily chart, like at the open each day, to kind of be bouncing around, gapping here, kind of between the 50 and the 61. Not necessarily that we'll gap up to the 61 and then down to the 50, but let's say tomorrow's open, we might gap down below the 50 and just kind of have a lot of gaps at the open, kind of like we did today with the gap down. We don't really have a lot of unfilled gaps other than yesterday's close here that I need to mark, and then our close from kind of the Friday before MLK Day. All the other gaps have been filled. That's actually a healthy market condition. That means there's not a lot of kind of hanging orders or positions that have not had the opportunity to make themselves whole. So if we roll over, let's say tomorrow we gap down and then get a big sell off Friday, you could draw up the low to high retracement here on the daily chart as a possible bounce point. It'd be like a 4,400, so a big round number. But if we get momentum to the downside, we also have declining volume on the way down and slightly increasing volume. Switch that around. Increasing volume on the move down, declining volume on this rally. So it wouldn't surprise me if we come down here and retest lows and then dip below lows, put in the hammer. You see that pattern a lot. It kind of makes an H, but there's definitely been a huge decline in volatility. So the fear index, if you will, fear is not super high. So we'll see what happens in the next week. But by and large, when you have a big move down like this, and then you get these big up days, they tend to be followed by a little bit more of kind of a gap open. So just watch for those. Did put some puts on in the Nasdaq actually, just because the Nasdaq, if we look at the SPY first, was sitting up at the 61.8, whereas the Nasdaq was below its 50%. So I put those on at the close yesterday. Obviously, the gap down helps that today, but we'll see. I used a real short expiration of next week, end of next week, just because I figured, well, if we go higher from here, if we would have gone higher today and closed bullish, like outside the 61.8, I'd be closing them out anyways. So I either want a quick rollover, or if we move higher, I can get out, and if you do a shorter expiration, they're obviously a little bit cheaper. Okay, so let's go into intraday today. And we'll go to the 5-minute chart. First one up. So this morning, when we talk about patience and how to become a more patient trader, it's helpful to start with the slightly larger time frame of a 5-minute, and then I do my execution on the 512. And when you have a 5-minute chart and you can draw up a retracement long, just meaning from low to high, and it breaks at 61.8, and then you can turn around and draw a retracement short, and it breaks its 61.8, you really want to draw a box from those two anchor points and call that your no trade zone. And if for those that were around today, a big mess of a chart in the kind of the middle of this range. I've got the top and bottom of the 30-minute high and low marked, and we've pretty much just been a sideways, a rectangle inside of that range. If we go to a chart like yesterday, where we can draw up a short, and we can see, okay, well, we broke the 61.8, and then we draw up a long, and we break the 61.8. And keep in mind, I'm not putting my orders at the 50% here on the 5-minute drawing. I'm doing this drawing on the 5-minute, then I come over to the 512 and I look for that price, okay, 4557, and that's where I look for a smaller retracement to place my order. But when you have two failures back to back, so you have the failure of the short, then failure of the long, again, just kind of draw a box around that, and this is going to kind of be your no trade zone. And so where the trade setup was yesterday was actually a counter trend long down in here at lows when we kind of dipped below the box. And so by being able to draw those basic retracements on the 5-minute, it helps you stay more patient because you're waiting for a bigger level to show its support or resistance, and then you're coming to the smaller time frame to place your trade. If you came into today and just went gung-ho, placing all kinds of trades, I mean, there's a whole jumbled mess of chop, and it can be easy to either start off on the wrong foot or just take a bunch of unnecessary stop outs. For those that were in the Tuesday trading room, we do that every week. Tuesday trading room over at EminiMind.com/VIP. This last Tuesday, I mean, there were 3 or 4 setups that I specifically passed on because they were not, they were just kind of right in the middle of the range, and they ended up, if had I have taken them, they would have been stop outs. So saving yourself, building the patience with that little bit higher time frame will help to make you more money in the long run. Today's so I had one today, one yesterday. 823 was today, and this was, let's see here. Oh, this was the first poke above the top of the 30-minute range. So that was right here on the 5-minute chart. And notice how we fell back down, and this is how I draw up the retracement, or drew up the retracement. We broke the swing low back here, and we obviously broke the 50% long. That's 61.8. And this short at a 27.50 was the actual entry. This short lined up just below the top of the first 30-minute range here, and traded clean, rolled over, trailed the next 61.8 like this, and got another couple of points out of that after the first target on the first half of the position. Yesterday, kind of a similar situation, only in the opposite direction. If memory serves me right, 829 is where I had it here. And if we go forward, this one was, so here's the bottom of the first 30-minute range right here. We dip below it, we come back into it, and again, I'm not taking trades in the middle of the range here because we broke the two 50% kind of back to back. There's not really a trending nature. We're not going 50% short and then another 50% short and then another 50% short, kind of going stair-stepping our way down. We did end up with a bit of a channel yesterday. If you kind of connect some of these lows, but the swings, so we had that bit of a channel, but the swings on the way up were strong enough that every one of these halfway back shorts, they were breaking through. And so there wasn't really a good opportunity to short in the middle of the range. You wanted to look at the top of the range. And you could take what would be the 30-minute high here, like this, and identifying that there's more of a channel forming, tilt it down to get this channel and say, okay, I'm going to look to short at the top of the range, but I'm going to stay out of the middle of the range. And again, that helps build patience as a trader by identifying, okay, these are the areas when we're range bound. I want to be at the top and bottom looking for trades. And if we're trending, then I can be, taking the next setup in the trend, in the direction of the trend. But yesterday, had a little long here set up. Neither of these had a lot of follow through, and that's fairly typical for more choppy days. But this one set up here at 47 and took a little bit of heat, but then made it up at least to the first target and then trailed the next retracement, and that one went for a couple points as well. So two smaller trades, but the benefit of coming away with fewer trades is that the patience of passing on a handful of stop outs can make you profitable on the day. You have a couple of, you at least keep the momentum going. You don't want to start the week off, get into a rut, try to dig yourself out of a hole, and by the end of the week you're just in a tizzy in a huge underwater with your P&L. So some weeks you end up having a lot more trades than others, and there's times where I can kind of just tread water for the week and come out scratch, or at least come out like yesterday and today, a first target and then a couple of points on the second half of the position. It adds up over time and at least keeps your momentum building. So as we head into next week, keep an eye on the VIX, on this volatility here. If we start to sell off and roll over more, I'd want to see that volatility jump. If we don't really jump in the VIX there, then this 50% long could definitely come into play and act as some support. It also lines up kind of with the top of the consolidation from down here. But still think it's going to be a rocky road ahead. But when you have volatility in the low 20s, you will see smaller ranges on the intraday candles. We're already down to, yesterday 50-point range, but the candle looks pretty small compared to all these back here when you're talking 150-point range. So I do find the VIX fairly helpful, as well as the NYSE tick. And when you do look at the NYSE tick, I encourage you to kind of ignore the first 5 minutes or so. You get these extreme readings at the open. I like to make a note of the breadth and the advanced decline line reading at the open, but just ignore the NYSE ticks for the first 5 minutes, and then you can have a reference point for, okay, here's where a relatively low tick is at the open, but not in those first 5 minutes. So here we're talking like we're about 15 minutes after the bell this morning. We had those low prints, and then we've sort of just kind of been range bound the rest of the day. And so going forward, if you were, let's say you were trading the afternoon, you can't trade the morning, you still use this 30-minute high and low of the day. Obviously, if you're trading at the close, you have a little bit more data to go off of, and you can see, oh, did we form a trend today? Have we been range bound all day? And you can play those at the close. A day like yesterday, where if we draw, I'll just put a box around the first 30-minute range, it would be something like this. And most of the day were spent inside of that range. Well, as we get towards the close, drifting away from that range or that box, you can see we poked below it here early, and then we came right back into it. Looking at the breadth and the advanced decline line can be a helpful indicator. If those are close to 1-to-1, you're going to have a better chance of being in that horizontal range. And so if you are playing the close and you were range bound all day, maybe looking for a kind of reversion to the mean, here's where the open was here, basically right in the middle of the box, and maybe playing a short near the close back down into that range. So I hope everyone has a great Friday, great rest of your week. If you have questions, drop them in the box below, and if you like the video, give it a thumbs up. Thanks. Have a good one.